Welcome again to the Rick Helps Real Estate Show. Glad to have you back, and thank you. Yesterday, I hit 3,000 subscribers. Yahoo! It's kind of fun. I do this kind of as a hobby. I started getting more aggressive on YouTube when we were told to stay home in March of 2020. I thought, well, might as well get grounded in the numbers, and I did. And so I just kept putting the content out to help you and to help me understand what's going on in the market in case we spot a canary in the coal mine. So it's been it's been a fun journey, and I'm going to continue it. Going to kick it up a notch here in a couple weeks. You'll see what I'm talking about, and I hope you're getting something out of it too. And I have fun doing this. I used to have a corporate job, and I would have to do quarterly reports all the time and stand up in front of people. And I had a vice president that one time I got ready to stand up and give my numbers stuff, and he goes, "No humor, Rick." Well, that's like telling me before I go up to give a speech, don't breathe. What? Because I'd always start with some kind of a joke. And those of you that public speak, you got to have a hook, right? I call them head-turning moments. So now I get to have my YouTube channel. I can be as serious or as silly as I want to be. And in fact, if you call me and say, "Rick, I want you to come over and talk about listing my house," chances are I'll probably show up in the same t-shirt. I don't put on a fancy suit and bring an iPad. I sit down with you and we look at the numbers just like a couple of chums having a cup of coffee, and we go over it and figure out what we want to do. So if you're looking for fancy and flash, I'm not the guy. But today we have, you know what? I didn't even check. Let me check. Gosh, this is silly. See how many listings we have today for a Wednesday. We have 6,232. Okay, that's been about where it is, so nothing major there. But here's the new numbers that came out. Listings compared to last year are up by 31%. Sean says, "Hi, Rick. You mentioned the Cromford Market Index, a leading indicator. Do you know by how many months, years that leads? It seems in 2008 crash numbers were showing in 2005. They started cracking in 2006, Sean. The numbers were pretty darn obvious, especially when you saw the Cromford Market Index diving like it did." See if I can pull that up. And Sean, are you in the Seattle area? So anyway, our listings are up 31% versus last year. Pending is down 5.7%. But the price is up 4.1% versus last month. Now, how can that be? Well, those offers were written in end of February and March. So, things are still climbing along pretty good. Oh, Sean says no, Chandler. Oh, there's another Sean I was talking about. Sorry, I was confused. So one of the things that if you look back on a video I had a few weeks ago, and I was talking about numbers to watch, the ones that I was really looking at was, I track the 7-day moving average. So I made this chart. It's a little dirty here because it's got more information. I'm going to show you what it is. But we got a gap here of about 900 homes, listings that are coming on, sales under contract. Now, this number is coming down the past 7 days. And I pointed out yesterday that when everybody's saying, "Oh, sales are way off." Well, we're down, 5.7%. But, a large percentage of a small number still ends up being a small number, but we're still kind of trending where sales have been. Now, these big dips here, this was pointed out yesterday asking the question, you say that the record low of sales is 2,700, but we crossed it twice. Those are holidays, so they don't count. And even this, that was Easter. So the big dips that you see in here are holidays. And hi, Jackie, good morning. But one of the things that I said that we need to watch for is pending listings. And we're seeing that pending is starting to come up a little bit. But under contract backups has taken a huge slide down. So a number of contracts being accepted is getting lower. But here's what I think is the canary in the coal mine here, and this is contingencies. Look at that. They're going up. Why is that? Well, if you're selling your house and somebody comes to you and says, "I want to buy your house, but I can't buy it until you sell mine," in a hot market, you can't even see that. I'm right in the way. There we are. They're going up. In a hot market, you're going to tell them to pound sand. You're not going to sit and wait for them to sell their house unless there's special circumstances. It's a different price and you really like all the terms, you might. But if things are starting to turn, then you're more open to accepting a contingency before you're open to accepting things like contributing towards closing costs, or more importantly, lowering your price. So that's one of the first things I think that start to show an increase before you see anything else. Now, we've got listings up 31%, pending listings are down almost 6%. When are we going to see price adjustments? That's going to take a while. And if we look here on the Cromford Report data that they came out with this morning, and I'm going to get rid of my face there, saying between late October and mid-March, we saw a downward trend in supply. However, this has completely changed direction over the past 6 weeks, and active listing counts are rising very strongly. They're up more than 32% in a single month. Remember, a large percentage of a small number is still a small number. One of the most dramatic shifts in direction we have ever seen. If this trend continues for several months, the market will change significantly. He's not saying if this changes this month, that next month's going to be radically different. He says if this changes and continues for several months, then we're going to see a difference. The large increase in supply is caused by a combination of factors. First, we're seeing more new listings arrive, possibly because people who have made large unrealized profits cash out while the going is good. Secondly, we're seeing a significant drop in demand as a sudden jump in interest rates and eye-watering price discourage owner-occupants from entering the market. We note that the listings under contract are down more than 6% last month. Closed sales are down more than 9% from April. Demand is weak and getting weaker. The overall effect is a major cooling event, turning a hot housing market into one that still favors sellers for now, but it's looking increasingly dangerous with each passing day. I think it's safe to say that as we point out a few months that we're nearing the top. Now, I don't make long-term projections, but I always said that it's kind of easy to make 3 to 6 months projections. I think we're nearing the top. Tell me what you think. Jackie says, didn't we start to see increases like this last year when it reverted? We did. We saw in the Cromford Market Index that things started to turn on us. Here's days of inventory. It's starting to come up, right? It kind of did last year. And if we look at the Cromford Index here, see if I can pull this up somewhere in here. I should have had this up ahead of time. I think we did see it, Jackie, start to come up. Did you mention appreciation for April was 4%? Yes. Yeah, that's pretty aggressive, isn't it? Here's the Cromford Index. I'll do the weekly chart. So last year we kind of did start pulling up, but there seems to be such, we pulled up in the summertime is what happened on the index. But there's some more dynamics here. I mean, the inventory is climbing faster than it has in a long time, and the sales are dropping. And I'm looking at those little numbers that are changing just a tad bit. And it's just saying we should really keep our eye on it. And that's what I hope we accomplish here on the channel is, let's see what happens next week. Let's see what happens a week after that. 2 weeks doesn't make a trend, but 6 weeks does. And one of the things that the Cromford market was talking about was, make no mistake, closed prices will continue to rise for some time. They are a trailing indicator and will only stop rising long after the market has cooled down. So we could see price increases continuing through the summer. But it does not take too much imagination to see a situation where they overshoot. Prices go up and then boom, back down. Right now, we've just seen the average square foot rise 4.1% in a single month. But this reflects a huge imbalance between supply and demand that existed 2 months ago. The imbalance is much smaller today, and it's shrinking noticeably every passing day. We're entering a much more uncertain period, and great caution is advisable. Jackie says, sales are dropping last summer, but we thought people were finally getting out. Yeah, they were finally, I'm going to buy a house, I'm going on vacation. There was a lot of that going on. We're seeing here, too, where purchase applications are rising, according to Mortgage Daily here. Purchase applications rise on the threshold of the Fed meeting. The Fed's meeting today. The notes are coming out this afternoon. People are convinced that if they come out and say we're going up 50 basis points, that tomorrow morning rates are going to go up. That's already baked into the numbers. Now, if they come out today and they say we're going to go up 0.75, and by the way, we're probably going to go up next month too, then we might see a rate move. So people ran to get their mortgages locked and get ready to go. They're buying homes right now ahead of this meeting. But one of the other things that's out there, I mean, look at this chart straight up, right? The purchase applications were down 11% year over year, but they were increased 4 to 5% from 1 week earlier. But I saw a number here. The 127 basis point jump in rates over the past 2 months has triggered a 49% drop in refinance activity. That, my friends, is why you're seeing all these loan officers being laid off. The big numbers like Quicken, Lending Depot, or Loan Depot, all these guys, they're getting laid off because the majority of their big cash cow was refinancing. Well, who's going to refinance now? Hey, I'd like to get my rate down to 5. Where the hell you been? So, and the big question always comes, well, when are the investors going to give up? I don't know. I think as long as they see price appreciation on the horizon, they'll continue to buy. And as long as they see vacancy rates for rentals hanging in between the 4 and 5% range, the cash flow is good. They're going to continue to buy. And what we're seeing is more of these build-to-rent communities. Here's another one. On the heels of opening its first build-to-rent community in brand partnership with Mesa-based Christopher Todd Communities, Taylor Morrison has forged a new deal with a global investment firm to expand even further into this niche market. And this is what they look like. They're little tiny houses. They're all close together, and they got a pool and a dog park and a recreation center and all that stuff. And you rent them. You can see this one's built across the street from a mobile home park out in Mesa. Waterbug, trying to predict the peak is a trap caused by how brains work. Our brains are pattern matching machines and love to look at a chart and imagine what the future will be. Well, it's a good hobby for me. So, yeah, nobody rings a bell and says this is the peak, but you got to be honest with yourself sometime and say, back in 2006 and 2007, and even back in the 1980s, and some periods in the 90s, you're looking at some data and going, this might change the market. I think that's fair, and it's a good assessment to say, looking at some of these numbers, that might change the market. So let me ask you this. iBuyers that are buying right now and flipping them and selling them for more money, will they be around when the market balances? Would that impact our market? And I think the answer is yes. Here's another home builder that's going to be putting in out in Fountain Hills another build-to-rent community. These guys are sprouting out everywhere. On the heels of opening his first build-to-rent community in Fountain Hills, Keystone has 4 other projects on the drawing board. These things are climbing up and showing up everywhere. That sooner or later we might reach a saturation point, but at the moment, as soon as they build them, they're filling up. So that's a trend that's happening. People are getting tired of living in apartments, riding the elevator up and down. Got to walk your dog. You got to go take it down in the elevator. It's kind of a pain. Sean says, Rick, if you compare our market to Denver, we are comparable, cheaper. Do you think we're heading to more similar price to Denver? Unknown. All I know is right now our inventory is going up and our sales are starting to dip. And eventually, if this trend continues, we'll balance out. Comparing it to other markets, I don't know. Denver's starting to see numbers come down as well. It's really hard to make city-by-city comparisons. We go, oh, I'm outpriced, let's go to Phoenix. They do it in Los Angeles. But then again, Los Angeles prices have been going up as well. So I like to interview people in the different cities and see what's going on. And we're going to be doing more of that on this channel. I'm going to bring people in from other markets and ask them what they're seeing. I think that's, it's entertaining to say the least. But Arizona is hot, it's on fire, and it's cooling. And we've priced a lot of people out right now. And that's disappointing to a lot of first-time home buyers that are coming in. And but then there's a lot of equity sitting out there, and we're seeing some activity in the over 55, over 65 age group that says, let's take some of this and let's get a smaller home in an over 55 community. Because we just saw closings over list price go up in Sun City and Sun City West. Waterbug, trying to understand market behavior is different from trying to predict the future. In the market, I need to make a guess today, sell or buy. Yeah, you need to make a guess, sell or buy. But if you're looking to buy a place to live, there's times when the market's going to price you out. If you're looking to invest, there's people who look at these numbers every day and try to make a pinpoint decision or a trend. Hard to tell. James says Florida's hot and getting hotter. Florida's the fastest growing market. I think 8 out of the 10 cities with the highest appreciation are in Florida. And I think Arizona was number 11 or 12. Jackie says we got a 1.275 million cash yesterday. Crazy how much cash is still out there. Yeah, Jackie, I'm looking at a listing we're going to be putting on in Scottsdale as well, probably over the weekend. And when I looked it up, 53% of the sales in that area were cash over $1 million. 53%. That market's active, as you know. And so they're not affected by interest rates. So there's a lot of moving parts in real estate. It's impossible to just say, oh, this moved, here we go. It really is. But I think it's probable that if we're looking at inventory going up and we're seeing sales start to dip, that eventually there will be some balance. When is that? That's hard to tell. It could take a long time. Now, the trend that we're seeing on the listing chart right now shows that it may take us to probably next year, not next year, but it could take us up to, if we were to clip along at this rate here, 9,678 June 13th last year. We could hit that by June at the rate that we're going. Are we going to shoot way up here? Once it crosses that line and keeps going, that's hard to tell. I mean, and if we do get the 10,000, that's still a shortage. The average, the norm for Phoenix before all this nonsense was about 24,000 normal homes. Of course, hard to use the word normal in this market anymore. I give it 2 months and we'll be at a standstill. I think 2 months is pretty aggressive because in 2 months we're going to be right about here at maybe 11,000 homes. That's still not going to be a standstill because if we're still selling a third of those homes on a weekly basis, you're still going to have pricing pressure. So it could, I think, for the numbers I'm seeing right now in the rate, what I'm saying is by the end of the summer, this is going to feel a lot different. And are we going to be balanced? No, but I think we're going to be able to ring a bell and saying, bidding wars are about to stop, maybe by the end of the summer. Property tax relief just announced in Denver for approximately $250 for a $500,000 house. Seems like a red flag warning for everyone, not necessarily a life jacket. Yeah, $250, whoop-de-doo. And it kind of depends on how they calculate their taxes too. And we calculate them far differently here. So I don't see people getting a huge tax hit like they are. Do you think when a shock for rates is over, the people come back? It is a bit of a mental game. The problem is, Jackie, that I think the age group that is trying to get into the house right now, while they're savvy and smart and they've saved a lot of money, anything over 4% they just view as high. And so that may take some adjustment. And they won't view 5% as moderate or okay unless we pop up to 8 first and then come back down to 5, like what happened to us back in the 70s and 80s. So I think, mentally we have to go through that adjustment. The rates went sky high. And I mean, there were people at 2.75 that were asking me when they think they can refinance again. It's like, you're at 2.75. Probably never. So it's, you go back and you look at interest rates and you look at the charts and the history of interest rates, and it's pretty clear to see where they've been over the decades. And I'd like to roll this, see if I can show you on this chart here. If I roll this back to 1990, so, whoops, come on, stay there. My mouse is, there we go. See where the rates were? 1982, 16.7. Now, if you're at 16.7 and now it goes down to 5, 5's going to be really sweet, right? But you can see that it started coming down. Now, most of these rates that we had up here, we had adjustable rate mortgages. There was nobody that was out there with a mortgage at 16.7. We were getting adjustable rates because we convinced ourselves, and we were right, we got lucky, that rates will eventually come down. So there were these products that were like 5-year ARMs and 7-year ARMs. And some of them you couldn't get out within a 5-year period, but some of them you could. There was no such thing as having them locked in for life. So then you can see here back in 85, by 87, things really came down. And right about here was where I refinanced to, I think, 11 and 3/4, 30-year fixed. I was pretty happy with that. Then I got down to like a 9% rate. And I think here, 87. Then I moved to California here, and rates were going down like crazy. And this is when my phone kept ringing, and we didn't have caller ID. So I would answer my phone and say, hello, we're happy with our current mortgage, and they'd hang up. So up, down, up, down. And now we ended up way down here for 2012, 30-year fixed mortgage rate at 3.1, way down here. So when do you think we're going to end up there again? Well, we haven't been there since ever. So I don't see that happening. And we've spiked up. And it's not where the rate is that's alarming. It's how fast it got there, coupled with the increase in home prices. Sean, Rick, I had an agent wanting to list my house for 1%. What's his catch? Sometimes there's not a catch. I'll talk to you in just a moment about some of the reasonings for that. I remember people assuming no quals at 11%, and they took them because they couldn't qualify. Yep. Use Rick at Sean. You need a great experienced agent negotiate. Thanks, Jackie. Yeah, I'll come over in my T-shirt. So I wonder where everybody that selling Florida is moving to. 1%. Okay. Now, it's not like I haven't taken a listing for 1%. It depends on the circumstances. Depends on, do they already have a buyer lined up? As a rule, when you look at people that take a listing for a very low fee, like a fixed fee, like I have a set fee of $1,500 or $2,000, they're listing it for 1%, but you still have to pay the buyer agent. So anywhere from 2 to 3%. Otherwise, it's kind of hard to get, agents to bring buyers to your house. They're not supposed to discriminate against interest rates, but we know, I'll put it this way. An agent's looking and you're offering a 1% on the buy side, and all the other listings that the buyer wants to see are 2 and 3%. Chances are the agent's going to get to that house that's 1%, and he goes, do you smell that? I think it's the neighbor's house. They're not going to say any encouraging things about the 1% home. Now, listing at 1%, there's a few reasons why agents want to do that. One, they just want to get the listings. And they would like to have a lot of open houses, because the people that show up, there's going to be a whole bunch of people that don't want your house and a few that do. And the ones that don't want your house, we get their name and phone number. We go out and show them something else. So sometimes they call them storefronts. You can have a open house over one weekend and walk away with, 10 leads of people that actively want to find a home. So now you've listed it for 1%, but you got, 6 people that want to buy at 2.5%, 3%. It's a win-win. Do they cut back on stuff? It all depends. There's one company where they offer 1%, but all of their agents are hourly employees. And I don't think you get that level of service or commitment, because they don't get a commission at the end of the day when they sell it, or it's very small. I know the 3-day people offer a really small commission per agent, but they're closing a ton of deals. I know one lady that's doing like 19 a month. I would be curled up in the corner over there crying if I was doing 19 a month. I wonder, let's see, it says 1% commission. Maybe that agent knows his worth. That's Terry. How about a flat fee? There are a lot of flat fee people out there, and that's the same thing. I know one agent that's got a website. I think it's flatfee.com, and she's all about open houses. I mean, she'll list your house for $2,000, and she will sit there for days doing an open house. I'm a little edgy about doing open houses when they're occupied, just for the liability of people coming in. So if you have a really busy open house, you're going to need help. It's impossible to watch people moving from room to room. I had a guy show up on a bicycle in Gilbert once as I was packing up. And he goes, oh, this one of those Lennar homes, is this great? You mind if I take a quick peek? And I go, no, not a problem. And I heard this thing close in the bathroom. And he came out and he had his hand in his pocket. And I was kind of suspicious, but I made the mistake of not saying, what do you got in your pocket? Well, he went back in the bathroom and he stole their meds, and he rode off on his bike. And it turns out there were a whole bunch of people doing that, showing up on bikes and stealing meds out of cabinets, because bikes don't have license plates. I mean, I end up going, yeah, the guy's, he's 5'8", brown hair, and he's on a bike. That's all I could tell the cops. So Jackie says that they're willing to give themselves away. Imagine how they protect you. Show a home for a $5,000 commission. Look, the commission isn't earned because we put you in a car and showed the home. If you've ever seen what's involved in a transaction, in all the ways it can fall apart and how much work you put into it over the course of the 30 days. Sometimes just trying to keep it alive, trying to get through the inspection period, lining up contractors, going to the home on several occasions. Man, that $5,000 commission, we earned it. And now I know some people just don't appreciate our industry, but try it. There's a perception that we just get in the car, show you, go home, and we collect a check. There's a lot of stuff that goes on, folks. I've got listing paperwork over here this morning. It's going to take me a few hours just to input before I even get the listing. Then I got to call, and we have to pay the photographer. And I pay the photographer a pretty good sum because I want some really good photos out of that. Then I have to take a look at the offers that come in, comb through them with a fine-tooth comb, be ready to answer phone calls all day, every day before we have an offer, and then negotiate any possible repairs. So it isn't just getting in the car and showing a home. Sorry if I went off on a tangent there, but I think Jackie would agree with me there. It goes way beyond that in the market, especially to $10,000. Yeah, take a look at, I'll show you this on the Cromford Index here. All these realtors making all this money. Oh, it's just unbelievable what they got. So let's see. Let's look at agent production, okay, in 2021. It's showing how many homes they sold. So if we were to sort this by sides, you'd be stunned how many only have sold one home all year. It's pages and pages and pages. Only sold one house. So I pulled this up. I didn't show it to you, but and I'm not going to go through the ranking on that. But it's staggering. It's absolutely staggering. Jackie says, I had $1 million that fell out. I spent 18 hours of prep work to win my seller the earnest, and UI yet, he didn't earn a penny. Yeah, I can't tell you how many deals I've had. I had one just last month where the guy called me at 4 o'clock, wanted to see a house at 5 o'clock, and these people were going to review offers that night at 7, and because the seller was in New York, they already had an offer, so I had dinner plans. I dropped him. I drove over there. He wanted to write an offer on it. I came back, wrote the offer, sent it to him for signature. He wigged out because the first thing it said on the contract was, this is a legally binding document, and it scared him. I said, well, of course it's a legally binding document. Any questions you have on it? Well, I'm going to have to wait. I may be doing this too fast. He backed out. Didn't even want to sign the offer. He backed out. Freaked out about it. And thank you. I canceled my dinner plans and spent 3.5 hours writing an offer and going over. And how much did I make on that? Nothing. I don't get paid by the hour on my gas. Hey, speaking of gas, how come we have a gas shortage right now? I went to fill up at a gas station yesterday. I pulled into a Quick Trip. Half the pumps had yellow bags over them that they were out of gas. Then I found one that didn't have a yellow bag. I put my card in, and it was out of unleaded, and the other one, and my only choice was to pay $5.25. I go, what happened? A good agent creates lifelong relationships, and our service doesn't end at close. The 1% agents are gone. And gas, $4.50. Sean, yesterday, $5.25. I'm going to walk today. But I don't know why we're out of gas. I'm hearing things like there was a pipeline problem on the East Coast, or there's a shortage of drivers, but I hope I can find a station that has gas today, so that I can go out and spend it and show homes nobody wants to buy. Well, I hope everybody enjoyed the show, and we're going to keep looking at these numbers. Like I say, it could be a canary in a coal mine, could be nothing. It's going to take several months for this to shake out, and we'll just continue to watch it, and we will watch it right here. Have a great day. Take on the rest of the week.